Market sentiment is changing, and investors are now having to factor in the likelihood of a far sharper taper and early interest rate rises from the U.S. Federal Reserve. That's meant a rotation out of tech and growth stocks and into old economy names and sectors. The last week also saw sizable outflows from SPY, with more than 8.15 million units redeemed by traders, equivalent to approximately 0.9% of the outstanding issue. With tech and growth stocks accounting for more than 25% of the S&P 500, it could be a choppy run into year-end for the blue chip index tracker. This also took a toll on Ark, the Ark Innovation ETF. Cathie Wood's actively managed ETF is full of technology and growth stocks, which are thought likely to underperform in a higher interest rate environment. Long-term holders of the fund will, however, take some comfort from the fact that Ark is up 118.8% over the last 2 years. The prospect of higher interest rates and an end to quantitative easing has so far had little impact on TLT, the 20-year plus Treasury bond ETF. That suggests that the bond market still thinks that higher interest rates will be a short-term measure designed to keep a lid on inflation. For bond yields to rise, bond prices have to fall. For now, investors seem happy to give TLT and the longer-dated securities it owns the benefit of the doubt. Joe Biden took emergency action earlier this week to stabilize the price of oil, authorizing the release of 50 million barrels of crude oil from the country's strategic reserve. China, India, South Korea, Japan, and Britain will also release reserves into the market from mid-December onward. The price of WTI crude has risen by 82.3% in the last year and by almost 62% year to date, and that's reflected in the price of USO, the U.S. oil fund that tracks the price of WTI crude oil. However, strategists at JP Morgan believe that at around $78 per barrel, crude is cheap relative to other asset prices, and on that basis, fair value for oil would be $115 per barrel. XLV, the S&P 500 healthcare sector ETF, was caught in a two-way pull last week. Drug stocks in the sector index such as Moderna, Gilead, and Pfizer were good gainers. However, growth-oriented names such as Dexcom, Teleflex, and Charles River Laboratories were big fallers. Bank of America summed up the sector and the prospects for XLV in its 2022 U.S. equity strategy note, published on Wednesday, saying that the healthcare sector was inexpensive and trading at a record discount to the S&P 500 index.